Welcome to Future Fabric Expo, Forces for Change, using policy and business case to drive corporate action. I'm very happy to be here today. I think most of you may or may not know that this is the 15-year anniversary of Future Fabric Expo. And we're in Brussels, which is a big change of scenery to the last 15 years. It's also a very timely discussion because we're in Brussels where a lot of the policy is shaping. And I think you're all aware that more and more policy is coming, and especially for the fashion sector, it's going to really influence how all of us work going forward. My name's Kristen Nuttall. I have a consultancy called Appso-Supro, Applied Solutions for Sustainable Progress. I work at the intersection between design and sustainability. I'm a big believer that creativity is going to be one of the levers that's going to help pull us out of our situation. But today the focus is really on policy and business case. And that's why I have three wonderful experts here. First, Francois Souchet, who I've known for a very long time, and has always been a person who speaks very openly and truthfully about everything. So I'm excited to have you here today. He also has created something called Swanstant, which we'll be talking about a little later. I have Clara, who's here from the Fédération de la Mode Circulaire, and is head of advocacy and public affairs there. So we're going to hear a lot from her about what's happening in France specifically, but also in the EU in general with policy. And Tom Barry, who also I've known from past working with him when he was at Farfetch and I was at the Fashion Pact. So happy to have you here today. So yeah, let's get started. I'm going to ask you all, because I did a very brief introduction, but I'd like you to introduce yourselves. And also one of the things of what is maybe the one of the biggest barriers to preventing progress that you've seen in your work. Just one, Francois.
Okay, straight away under the bus. Good morning, everyone. So I'm Francois. I used to be at the Ellen MacArthur Foundation for a number of years, and now I have a company where we create climate-adjusted economic research and forecast. So we basically anticipate, or we try to anticipate, how the weather is going to impact different economic output, like crop yields, industrial activity, company performance, over the next 1 to 6 months. So really short term, very dynamic. And I think one of the key challenges that I've seen in building very different types of business case for change over the past 15 years is there's a key disconnect, or there was a key disconnect between, let's say, a climate timeline and a business timeline, and reconciling those two has always been quite complicated. A lot of business cases are speaking 2030, 2050, which for most business leaders is so far out in time that the numbers are discounted to zero. And the second thing is because there's a sort of attachment, which we can blame on McKinsey, no, I'm kidding. There's an attachment to large, attractive numbers as headliners that are underpinned by layers and layers and layers of assumptions. Most people who know how to read numbers tend to be very critical of those big, bold numbers that are put forward, simply because as soon as you start untangling the assumptions that underpin it, the whole edifice falls apart. And so building business cases differently in a way that actually can speak to an audience that has a different timeline, but also a different approach to numbers is quite critical.
Thank you. Clara.
Hello everyone, I'm Clara. I try again. So I'm Clara, I'm head of advocacy and public affairs at the Circulaire Fashion Federation. I'm also a PhD researcher in international law, specifically working on textile waste shipment and how it is regulated at the global scale. And so the Circulaire Fashion Federation is an organization that represents now more than 300 members, mainly in France, but not only, also in Europe. And we have three main missions. The first one is to represent our members to the French and European institutions, help them develop their circular activities through working group, market studies, and research projects, And finally, to promote circularity through that kind of events. So our specificity is that we represent companies that are involved in the circular textile value chain. So it goes from brands, retailers, second-hand platforms, recyclers, repair services, rental services, upcycling, and we try to give a common voice to all those actors. So regarding the barriers to the development of circular fashion, I think we are always debating about who is responsible of developing circular fashion. Some would argue that consumers have to be more aware of how they consume. Some would say that it should come from policymakers and regulation, and others would say that private actors have to start it. But I think that what makes the common issue is how we make it desirable to consumers, but also mainly obviously affordable, and it's directly linked to how circular business models are profitable, because right now most of the actors, no one would say they do not want to go to sustainability, but then you have to make it profitable and develop that specific aspect. So at the Federation, we are right now working on that topic. We have a working group with other French federation on how to make those circular business models more profitable, assess what is working right now and what could be done better. But I think that affordability linked to profitability is really the key point.
Hi everyone, as Kristen said, I'm Tom. I'm now an independent advisor to brands and other change-making organisations largely in the fashion industry, because I worked for a number of years as Chief Sustainability Officer at Farfetch. But I've been working in sustainability for nearly 25 years now, and now play a role as either a fractional Chief Sustainability Officer or just an independent advisor to companies. I guess the thing which I've seen throughout my career, and particularly with the brands and businesses I'm working with now, I would describe as the challenge being that the approach to sustainability is scattered, and the work which I do with them is about trying to make sure it's really focused and really has got some real clarity behind it. So focused in terms of not trying to address every single issue which people would place under the sustainability banner, but focusing on the key things which are both material to the bit of the industry that they're in and relevant to the strategy which they have as a company. And those things are very unique to individual companies. And then clear in terms of, well, what is the value which you're trying to deliver? Businesses function because they're there to create value. We live in a capitalist society, that's how it works. And if you're clear on the value that you're trying to deliver, and then who in the business is trying to deliver that value, so what the responsibility of marketing or finance or sourcing or logistics, what the specific responsibilities are for them and how they deliver it, those are the key things. So focus and clarity is what's needed. The problem at the moment is sustainability is massive, and companies tend to see it as a blob and just try and do a few nice things because it's the right thing to do.
Thanks, Tom. I mean, I think you see the red thread between all three is a little bit that everyone has their individual approach. And I think, as Clara was saying, the topic has been debated for years of whose responsibility is it, which is everyone's. It's not anyone's non-responsibility. And also that, as Tom was saying, different businesses have different priorities and different timings. And the climate has a very different timing than most other things. Tom, I'm going to come back to you. There was the CFO report that came out from BCG. Adam Carlson quoted saying, "Sustainability sharpens how we run the business. When you start measuring impact, you uncover inefficiencies. The real cost isn't only emissions, it's the operational waste they reveal." So a lot of that report was basically stating that CFOs are not integrating sustainability into their strategy. And so my question to you is, if someone at the H&M Group level can have this type of ambition and really make it a point to speak publicly about that, why are other brands, why is it so hard for them to embed it? I know you mentioned that it's a big topic, sustainability, but what would be your kind of pathway to help brands understand that better?
Yeah, I think the specifics of the quote there is really telling. So when they're talking about integrating sustainability, they say it's about uncovering operational waste. And in a fashion business, that's really about, well, it could be a number of things. I haven't looked at the detail of what, but it could be about reduced returns costs, or it could be about reduced markdown rates. But it's only going to be a few key metrics which are included. If that's the key thing which they're focused on and worried about, and the key thing they need to solve in their business, then that's how sustainability shows up in their CFO's metrics. And that might be why he's really supportive of it. Oh, sorry, she. Is really supportive of it. And I think the ask of then, are you including sustainability in your financial metrics within a company, to any CFO, they will probably say, no, not really. Because there's nothing specific in there which would say, well, what is important to my business, and particularly what's important to the things which I'm being asked to focus on as a CFO within my business by either shareholders or the CEO. So it's just about getting really clear and focused. I mean, at Farfetch, we're only doing we have three metrics. One about selling more, better products, one about growing the volumes of circular transactions which we have with consumers, and one about reducing the carbon impact per delivery. And the carbon impact per delivery metric was the closest to what the H&M quote was. But even within that, we're really focused on shipping consolidation and on innovations in fit, because those were the two things which would really drive cost savings in logistics. So.
Right. Makes sense. I mean, it has to relate back to the business, because otherwise there's no point in doing it. Francois, maybe you can speak a little bit about the tool you've created, because the idea is basically that you're looking at the emissions created by a company and pairing it back to their financial performance. But is that leading to the things that Tom's talking about, like creating specific metrics internally? Or how do you see, if someone uses that tool, how would you want them to use it? First, how do they actually use it?
So one of the things we've been looking at is it possible to connect emission patterns to financial structure? And can we identify optimum emission patterns based on the financial structure of a company? And so using our models, we've developed a preliminary tool covering a little bit over 100 companies, where we take public companies, we take their financials and we look at particularly profitability, return on investment, and leverage. That is level of debt the company has. And that can give us a degree of indication of how its emission patterns should look like. And based on that, the first thing we can do is say, well, are you close to your sort of emission frontier, which is what financial peers are able to deliver in terms of emission? And the second thing we're able to do is tracking emissions over time. We developed a metric that we call carbon speed. It's the speed at which you add or remove carbon per additional million euro of revenue. And so by tracking how the speed evolves over time for a company, we can see whether they're converging towards their frontier, whether they're diverging from their frontier and need quite serious correction. And if they are at their frontier, we can see whether they're sustaining their advantage or whether they're starting to erode their advantage. And so that gives us, on one very specific metric, which is emission intensity, an ability to benchmark companies with a little bit more depth than just giving a disclosure rating, and then evaluate what the trajectory is for that company regarding its emission performance. Okay.
And then they're benchmarked against their peers.
Yeah.
And that's only for their internal,
Yeah, we don't.
It's not public.
No.
Because I think most people don't want to be compared publicly to others.
And the thing is the methodology is still recent enough that I don't necessarily want to publish it like this. But also once you start naming companies, and there's a lot of variability because the way carbon is accounted might differ. There might be revision in carbon and stuff. So there's a sort of like explanation that needs to surround the model, that if you just deliver like a model open like this, it can lead to misinterpretation that are not really helpful.
Yeah, makes sense. I feel like there's also, in terms of, Tom, when you were saying that there's a difference of like every company is different and needs different metrics, but then at the same time we have all these kind of global standards and fashion industry standards and fashion industry organizations that are putting out policies. And Clara, I mean, one of the things, maybe you can talk a little bit about some of the work, the Federation Circulaire de la Mode, and also about there was a report that also came out with KPMG echoing the same information, that there's all this, there's ambition out there and that's very clear, but the execution is lacking. But I find this a constant topic we keep saying, like everyone wants to do something and we're not meeting the target. And obviously the three people here are all working in a direction that can kind of help us get closer. But I'm wondering if you can speak a little bit about how you think policy is going to help to push that. Because we see that there's tools that can help. You have individuals such as Tom who's like helping to pair together in the company. But if you can talk a little bit about that.
Yeah. So obviously we need some private actors that have this initiative of doing better, but we should not be naive, and some actors would not change if they are not obliged to. So that's why regulation is absolutely essential, and also to make sure that everyone's follow quite of the same rules. So there are a lot of topics around harmonization that is linked to it. But yeah, now circular fashion is not a niche market anymore. So we've published several market studies, and the last one we've published with KPMG on circular fashion at the European scale stated that the circular fashion market would represent 100 billion euros of value at the European scale in 2030. So we're not talking anymore about like the little shops, the kind of niche option that circular fashion was often described as that, but now it's like really an industrial tool for the competitiveness of the European Union and for the competitiveness of all member states. So obviously we have to regulate it, and we have to regulate it well, so it pushes all the actors to be ambitious and do better on sustainability, but still not be too much, for instance, for SMEs that want to develop circularity. So we really need to find a balance between that. And so France has been on the upfront concerning the regulation of circular fashion. So 2 days ago, the Senate and the National Assembly adopted an agreement on the so-called anti-fast fashion bill. So we're trying to regulate the volumes that are put on the market to create like maluses for actors that put too much volumes of textile on the market. So that's first a good way to do it. And then obviously we have also to tackle it at the European scale. And since 2022, there is the European strategy on circularity and textile industry that has led to the adoption of several regulations linked to it, specifically, obviously, the eco-design regulation that really pushed the actors to do better on the eco-design aspects. But we have also several regulations linked, for instance, to waste shipments, and also another really important topic linked to circularity is the extended producer responsibility, which is, to make it simple, it's based on the polluter pays principle, which gives responsibility to the manufacturers to manage the end of life of the products they put on the market. So it works as, if you are a manufacturer, you put a new product on the market, you pay an eco contribution to a producer responsibility organization, and then this eco contribution is supposed to be used to finance the end of life of the products. And so obviously, sometimes we see regulation when we are in big groups just as a compliance matter, but it's not, because it's really structuring the whole market. Like EPR now is a huge thing, and it's not only legal, it really structures the markets. So as a brand, if you're a big one, but also if you're a small one, you have to be aware of what's going on, and that's why it's really important to have ecosystemic organization that gather all the information to make sure that everyone knows what's going on, and also so we can raise the voices of the actors that are on the market to give good advice to the policymakers on how we should make regulation.
Just a quick, can everyone hear? Okay, good. So I just want to go back to both Tom and Francois on because I think, and in my work, I often will use the regulation as like a starting point, especially for design teams, because it's like, this is coming, we have to follow it. So the sooner you can start incorporating it into your process and your way of working, the better off you'll be. But do you guys agree that that's a good starting point? Because a lot of the risk is, right, how much will these fines be? Is it going to actually have to, and when will companies actually have to follow?
I'm a huge fan of regulation. I actually think it's one of the key drivers for change across industry, particularly in the fashion industry. It's basically going to raise the baseline bar for all companies, removes the kind of cowboys in the space. I think as using it as the fundamental argument, as the business case, is probably where the problem comes. And I think that's been historically, it's partly why we're in a bit of a sustainability recession now, because sustainability professionals within companies rely too much on a wave of regulation coming through, and that was the business case for action. And as soon as that regulation fell back a bit, or was watered down, or companies were just able to go, yeah, we know what we're going to do there, and we'll just tick that box and move on, and then carry on as business as usual. That's been part of the problem. So a business obviously has to be compliant. It obviously has to meet the regulations which are both out there and plan to meet the regulations which are coming in, and it can be a driver for change. But I think really effective business cases build from that. So the example I always use in this is the digital product passports within the EU legislation. It's a key piece of legislation which is coming through, but time and again in companies which I'm working with, they have it as a technical compliance exercise for, okay, what are the things which we're going to need to put together to create for a digital product passport? The value case around digital product passports is all around post-purchase engagement with consumers. And if a brand can figure out how it is going to use a digital twin or a digital engagement mechanism to further engage their customers, frankly, to sell more, to win more customers, to sell them more product, that is reality, again, reality of business. They will win more than their competitors. That is the business case for me around digital. Yes, it's coming, regulation, you have to do something on it, but the business case is built around customer attraction and retention and long-term customer value, because you can do that by engaging post-purchase. So it's like a regulation, yes, absolutely, it's a fundamental driver in industry, but you have to build your business case on something which is going to make more sense to get businesses excited.
Again. And Francois, thoughts?
I agree completely with Tom, and I think what we're seeing is, from a regulatory perspective, there's also first a cyclical risk, but also a fundamental macroeconomic risk where if something happens that puts pressure on businesses, that will delay implementation roadmaps of, let's say, compliance-driven regulation, simply because business lobbies will probably justifiably ask for more time because they need to adapt to other much more immediate pressure that they're facing. And there's a question of balance, right? Like when you speak to some people about the implementation, and I think that's one of the things that the EU is doing actually quite well, is there's sort of like a degree of iterativeness in terms of deployment of key regulation, because some of them were designed in a very heavy way, costing an absolute fortune to implement and deploy and track, and actually coming after that with a package that makes it lighter or that changes some of the requirements to align better with the realities of businesses and the need to somewhat protect cash flow and productivity, which is like a key thing in Europe, that's quite critical. I think from a general standpoint, there's also one thing, and I think for the business case, Tom, we've often relied very much on like demand side for the business case, whether it's with regulation, whether it's hoping that one day people will care about this. We've relied on this quite a lot. But there's also a supply side, which has already quite a lot of business case in it, and actually, in a very sick way, the fact that climate change is accelerating and that the impact are measurable on the ground in a much more direct way. The fact that India has been experiencing over 50 degrees of temperature for weeks on end since April, putting a lot of people in medical critical situations, increasing absenteeism, lowering productivity, etc. That is quantifiable.
Well,
and that is not speculative, that is quantifiable today.
Yeah.
The fact that the cotton harvest this year will probably be quite depressed simply because we're moving from like a new El Nino cycle, which will be very, very extreme according to the latest data.
I mean, like now, the heat?
Yeah, exactly. But the cotton price last week increased by 9%.
Exactly.
Right. So the market are starting to react to it. So
the dependency on raw materials is like, it's going to be a huge issue.
Really, and that builds a business that's completely different from like, hopefully one day there will be a regulation that solves your problem. Like if cotton prices increase by 15% by end of year, I think it's going to put the bottom line of many, many companies at risk.
Well, and I think even like the destruction of unsold goods is one step, right? It's already making people think very differently about how they create products and then what they're doing with them at the end. Another point, Clara, I want to go back to some of the points on the circular VAT, because I think there's been some confusion of like what is circular VAT, and one, can you explain what it is, and also can you kind of give your thoughts of the benefits? Because similar to regulation, is it actually going to make a difference, and will people implement it?
Yes, so what we call the circular VAT, or it's also called green VAT. It's the fact for VAT you have different rates that are applied depending on the type of products that are concerned. So for most of circular products and services is the normal rate, which is 20%. So what the circular economy actors are saying is that we should install a leverage playing field for all the actors between like the linear one and the circular one, especially for instance for second-hand. So what we advocate for through circular VAT is to have reduced VAT rates on circular products and services. So it would be 5.5%, which obviously would make the price cheaper, so would have an effect on the demand. But what we are also trying to show is that it would have an effect on the offer. And so for the moment, it's mainly regulated through the VAT directive at the EU level. So member states, they cannot do it as they want. So now they can apply a reduced VAT on repair services. Most of the member states, they are not doing it, but I would say that there is around 10 member states that have a reduced VAT. So it's either around 5 to 6, or it can be also intermediate rate like 10%. I know that it's the case in Sweden, in Luxembourg, and in other member states. So France, we are really at the upfront regarding regulation, and we have a report on circular VAT. And so circular VAT is obviously for textile, but not only. Other type of products will be concerned. There is a lot of advocacy regarding that, but for the moment, the last 2 years, France did not adopt the reduced VAT for repair services through the finance bill. Okay. Even though this year it was adopted at the unanimity by both National Assembly and Senate, but it was not adopted because of the current political situation, and they had to make like some agreements at the governmental level, so they thought that was not that important. But so, for instance, in France, we do not have the reduced VAT on repair services, But the second step is also to change the VAT directive, so we would be able to have reduced VAT on, for instance, second-hand products, maybe rental services, upcycled products.
None of this has been implemented. It's just in theory at the moment, right? We don't have any business cases or examples of someone who's actually using that as a tool to connect with consumers, for example, to explain to them.
For the moment, it's not applied. So at the Federation, we've launched in January a working group on that topic. So the goal for us is really to show that it could have an effect on the offer. Obviously, it would reduce the price, so it would make it more accessible and affordable to consumers. But it's also a way for circular business actors to make better margins, because as we said several times, the issue right now is profitability. And those margins would be reinvested in the sectors, in jobs. So we're working right now on writing the deliverable that would be published and officialized during an event in Brussels on the 29th of September. But what I can say from now is that from the results we've made through a data collection is that the brands would be open to reinvest the money into the circular fashion activities and specifically on jobs.
Okay.
And there is also the Ellen MacArthur Foundation that published a business report on circular fashion lately, and they worked on the demand aspects. So we see that it could be beneficial on both aspects. And it's something that could be tackled through the Circular Economy Act that is currently being debated, but we are not that much optimistic regarding it. So we'll see.
I feel like generally anything you can do with the tax system to incentivize kind of better business practice is a good thing, and the kind of circular VAT is a really good example of that. And
have you seen any?
It's hard to make money in secondhand. It's very hard to make money in rental and repair. But actually they are things which can deliver other forms of business value. So in terms of either customer acquisition or in terms of customer lifetime value. So there is already a business case, but that doesn't mean to say you shouldn't incentivize it, because at the moment the business case probably isn't enough to drive the scale of investment that you'd want to kind of transform the industry. There is almost no scaled circular offer from any brand. The only things which have hit scale are the platforms. So they're not, they're almost outside the fashion industry, so they're outside the linear economy. The only thing which is going to scale it within the industry itself, so to make brands properly invest in circular economy practices, is through better incentives, just because the margins aren't good enough. Like, it's just harder to make money. So.
But I think to your point, there's so many kind of knock-on effects that happen from doing one thing. So I think repair services are not necessarily making a profit, as you said, but they are maybe engaging more with the consumer or building brand loyalty. So do you have any other examples of, I don't know, any of you could answer this, but I was asking Tom specifically of how you've kind of shifted what could be a business case that's not a, let's say, return on investment business case like repair, but then what are the other levers you're pulling to get people to buy into it?
Yeah, I think like the circular economy one is a really good example. I've just done a kind of accelerator program with a series of 8 brands, and a lot of them had like repair services or resale programs in place. And it varied massively, but often they weren't even really measuring any commercial benefit. They just did it as a thing which they felt like they ought to do. So that's obviously something they can change, and they'll actually start understanding the business value. But even if they did, like, they would often try and understand what the profitability of a specific transaction was, because that's what they're used to doing. Is like we're used to selling an item and making money on it. Whereas in the circular economy, you're building other forms of value. So the customer loyalty, customer lifetime value, the number of times people will come back and shop with you is an incredibly valuable business metric. And at Farfetch, our resale program, it wasn't particularly profitable, but it drove about a 20% uplift in overall lifetime value of customers.
Wow.
Just because you're giving people a service which they really like, it gives them another reason to come back to the brand. They might come back to the brand and not use the service again.
But they still are brand loyalty.
They like it because you've given them a service. So that's really key, and so you can use that as a lever. But you can also use like the customer acquisition argument. Customer acquisition costs businesses money. Like they you know, in e-com, it was a classic metric of what is your customer acquisition cost, because you have to pay Google and Meta to go out and source customers for you. You could compare the customer acquisition cost of offering a new service,
Exactly.
like a repair service or a resale service, which we did, and the customer acquisition costs were lower. And they were acquiring customers which were our best customers, because they were the ones who had the best closets with stuff which they wanted to resell.
Yeah.
So it's,
Exactly.
you know, positive. You can build it on different elements
Thank
other
you.
than just profitability.
Thanks, Tom. So we're going to move on to Q&A. Sorry, it was a little bit of an abrupt transition. Whoops, sorry. Clara, on the EPR, it was a question about C-level executives of brands, what they have to fulfill in the EU information websites. Like, how is that gonna work? So if they have to fill out all this information, are people actually gonna do it? Do you have any thoughts on that?
I mean, it's still being discussed, but I would say that the biggest issue right now is with the question of harmonization, since every member state, with the revision of the Waste Framework Directive, as a member state, you have to create an EPR scheme for textiles. For the moment, I think there is only like 5 to 6 member states that have this system. So if you are a huge brand with activities in several member states, you may be obliged to fill in 27 different EPR forms. So right now, the actors at the European level, they're really trying to advocate for some kind of institution or body that would be able to harmonize or concentrate everything, so it would be not too heavy on the brands. But for the moment, we do not have that much information. There is a Producer Responsibility Organization forum in which the Producer Responsibility Organization discuss that kind of topic and try to make it more harmonized, but for the moment we do not really know how it will be done.
Okay. And then, Francois, in this discussion of overproduction over volumes versus transparency, which do you think would focus, where should policy focus more? On giving like clear direction of like you have to reduce your volumes, or like we want to see more of the transparency of where you're sourcing and your emissions and related to your tool?
It's an interesting question. Interestingly enough, recently I was speaking with a few companies, and what we were discussing is the fact that if you look at transparency and traceability, it basically becomes a little bit like a foundation that unlocks a lot of other things. I'm doing a project at the moment on moving supply chains towards more agile model. So how do you act nearer to the demand so you make less forecast mistakes? Actually, you can like not do forecast anymore, but just react to demand. Now, that requires a deep understanding of your supply chain, not just at tier 1, but what unlocks it is actually tier 2 and tier 3, because you need that material to be able to be propositioned. So that is unlocked by transparency and traceability. So if you want to control your volumes, you need to have that transparency and traceability. If you want to better report on your emissions, your waste, etc., you need that. So fundamentally, I'd say the foundation really is having that learning, and it's a bit to what you were saying with the DPP, right? Like you can see it as like a compliance burden and being like, oh my God, we have to do this. Or you can see it as like, once we know this, we can react. And
Projects that affect
to
that
use
change.
like a bit like the classic example, but tariffs, if you had some degree of understanding of where stuff that you sell is made and where what you ship to the US is made, calculating your exposure to tariff was a lot easier than navigating blind and having to like rush through to try and understand what that cost you. Yeah.
Thank you. Thank you all of you for your time. Thank you everyone for listening. And we're going to close up now. Thank you.
Thank you, everybody.
Bye.